The job market is officially trash. Folks, in the last 2 days, we have learned first in the JOLTS reports that for the first time since the pandemic, we actually have more unemployed Americans than we do job openings. If you remember, in the heat of the pandemic, we had about 1.7 job openings per every unemployed. Again, today, for the first time since early 2020, we have more unemployed than job openings. In fact, job openings coming in at 7.17 was the second lowest reading since the pandemic. Then this morning, we got the ADP report. This is private payrolls. Private payrolls was estimated to be 75,000. Last month, it was 106,000. Drum roll, please. 54,000. We are clearly seeing a job market that is weakening, one might say falling apart. Is this just businesses refusing to hire? Are they nervous? Are they delaying decisions? Or are we seeing AI disruptions at scale? Are we seeing rising consumer worries hitting demand and thus plans? But all of this doesn't matter tomorrow. Tomorrow, we get the big weekly jobs number. Again, the big weekly jobs number, just so we know what to expect. Going into it, we are expecting 75,000 jobs created. We are expecting the unemployment rate to go up from 4.2 to 4.3. If we get a significant miss tomorrow, and that would make it 343, and we get significant revisions, I'm still thinking in the tune of 7 figures. I believe, and quite frankly have said for weeks now, that we're going to get a 50 basis point cut. I will admit, as of this morning, as of 10 minutes ago, I am spectacularly wrong. I am wrong, I am off. But as I've said for quite a while, it doesn't matter until Friday morning. So we shall see. As of right now, there is a 97.4% chance of a quarter point cut, with the remainder being no cut at all. According to the Fed Watch tool, as of right now, there is a 0% chance of 50. Let's see if that's true tomorrow morning. Other facts, man, still getting over this cold. Other facts about the job market, that we did get our weekly jobless claims. It too went up, still in the band of no concern, 237,000. That is up 8,000 from the week before. We do have 1.94 folks on continuing claims. This is still rising. I do expect this to eclipse 2 million probably sometime in the next 6 to 8 weeks. And again, as I said earlier, more unemployed workers than job openings. I do want to let you know about a very exciting event occurring inside school next Wednesday at 9 a.m. Pacific. The one and only Dion, who is the keynote presenter at Bigger Pockets this year, will actually be giving that presentation inside school just for the school community. Again, there's about 500 folks in there. I don't suspect all of us will be able to make it out to Bigger Pockets. However, Dion wants to give the presentation next Wednesday, 9 a.m. inside school. So again, if you are a member, feel free to tune in. It is now on the calendar. If you haven't joined yet, why not join school this month? Check it out, get the presentation, and see what you think. So again, very interesting stuff. Mortgage rates as of yesterday hit a year low. We broke the psychological 6.5, came in at 6.49. They will get better today after the week ADP report. We could see 6.45, maybe 4.6, something like that. Rates will get better today, but it all doesn't matter. Tomorrow is the big day. We did get some talk from Christopher Waller, Fed President Christopher Waller. Remember, folks, he is up for the Fed presidency after Jerome Powell. So he is clearly whispering in Trump's ear. These are things that he said yesterday. Wow. Tariffs are a tax and will initiate slower growth. I do not see a recession, but I see slower growth. Other colleagues, meaning other Fed members, have much higher neutral rates. What does that mean? Neutral rate is this, I don't know what to call it, fictitious, opinionated, theoretical, that's the word, theoretical rate where the Fed is not expanding or contracting the economy. What he's saying there is other colleagues think the neutral rate is probably at 3.5. And he thinks it's at 2.5. And again, I'm making up these numbers for comparison. Let me just tell you that Trump likes 2.5 a lot better than 3.5. Next up, Waller says you can always adjust rate cut pace. So again, I think Christopher Waller there is leaning into the idea of we could start with a quarter and then we could go from there. Do we need to pause? Do we need to continue cutting? He's trying to get the cuts started. Tariffs will not cause long-term inflation. We want to get ahead of a labor market that is slowing down, to which I say you are too late. And he sees multiple cuts over the next few months. Again, I think he's trying to get the market to expect at least 2, if not 3 cuts. And remember, folks, there are only 3 meetings left this year: September, October, and December. Kashkari, Fed president, says, I'm not forecasting a recession. That's good to know. I wonder if he's forecasting stagflation. Stagflation seems to be the order of the day. Interest rates have some room to come down gently. I think Kashkari there is trying to put a floor. I think he might be one of those folks that has a higher neutral rate. Inflation is too high and labor market is cooling. He's basically saying that the Fed's dual mandate, aka stagflation, is going to be a problem. Fed President Bostic is unclear how the consumer spending will evolve. Again, I would argue that consumer spending has exceeded expectations, and Bostic says it's unclear if that will continue. Musselman, I always get that one wrong. Muslim. Risk to the labor market will slow more than expected. Again, cuts are coming. Tariff revenue actually helping government financial position. Why is that? Well, again, it's taxes that will help pay off the national debt. Now, of course, it has just been President Trump has asked the Supreme Court to weigh in, because I believe the last ruling has issued most tariffs need to be reversed. However, it's on delay until the Supreme Court rules. Having to give that tariff money back would be a problem. Let's just say that. Then this one says, weak housing market poses downside risk to the economy. To which I say, where have you been? The housing market has been in a recession or a depression for quite a while. We did get some earnings we could talk about. Salesforce. Salesforce beat top line, bottom line, but actually issued weak guidance. Dollar Tree beat top line, bottom line, and raised guidance. I will highlight that one of the financial analysts I follow said the earnings of Dollar Tree were kind of dirty. What does that mean? Basically, they benefited from tariff timing, and that tariff timing will be reversed next month. It's one of those accounting things that I did back in the day, that you could make assumptions to make one number look better, but have to pay the price next quarter. Somebody saw that inside the Dollar Tree numbers. What else do we got? Let's talk about our school community, because again, folks, we need more wealth builders inside school. Just give you a flavor of some of the last posts that were in there. We talked about Dion's great book, Financial Freedom for the Lazy Person. The community is talking about this, saying it's a great book. It is an easy read. One person actually said this has replaced their favorite book over Rich Dad, Poor Dad. Talk about a compliment. Getting ranked above Rich Dad, Poor Dad on anyone's list is quite amazing. We had some new member introductions, which I always appreciate. If you are a new member, reach out, say hello, let the community give you a big hug. We had some folks ask about, what do you do when tenants are afraid of technology? Again, not all tenants are up on mobile phones and the like. And then we also had somebody share some accountability replays. So again, lots of stuff out there for you. If you follow me on Instagram, you know that yesterday was not a good day. I shared on Instagram that yesterday I traded in my dream car. If you know the story, I was 18. I was working in a car stereo shop, and a dentist rolled in with this sick car, and it became instantly my dream car. I've owned my dream car for 13 years. I smile every day I drive it. But yesterday, I got rid of it. I got rid of it for a couple of reasons. One is it's 13 years old, got 110,000 miles on it. It is my everyday driver. And it doesn't make sense for for a family to have just one car, 2 seats, because it was an SL 500. So I traded that in. We got a. I'll let you follow me. You can see what I bought on Instagram. We paid cash for something on Instagram, so go check it out. But one of the reasons I did this is I want my next car to be even better. But it's not. It's going to be such a nice car that it will not be an everyday driver. That was the problem I had with the SL 500. Is I drove it every day, 110,000 miles. My next dream car is going to be crazy and will not be an everyday driver. So we had to get something that we could drive every day. So go ahead, look, check it on Instagram, see what your boy bought. Let me know what you think. I would love to hear from you. I guess the last thing to talk about, kind of ending where we started, the job market is trash. The last thing I read is job cuts in August were up 39% month on month to 86K and up 13% year on year. Folks, I can't wait for tomorrow's number. It will be the number that drives a 50 basis point cut, in my opinion, all the revisions. Check me out on Instagram to see what your boy bought. And don't forget to check out Steadily. If you are a landlord in this crazy insurance market, you have to have backup plans. You have to get quoted different things. Check out the link below. Olivia and I do that every time one of our policies comes up, and they are helping out about 80% of the time. Better rates and, more importantly, better insurance. Again, folks, one of the things that my former insurance company did was drop coverage on little line items that you might miss. For example, dog bites. I've talked about that a couple of times because it actually happened to us. And Steadily Insurance covers that, at least in the quotes that we got. So it is a big deal. Check out your deck page, right? Your declaration of what's covered and not covered. And check out the insured replacement cost, because again, having an insurance that's below replacement cost is underinsured, which is not where you want to be. So give them a chance. If they can help, great. If they can't, great. It means you got great coverage already. All right, folks, we will be tuning in tomorrow with the weekly wrap up with Ty. Tomorrow's number is important. See you inside school. Bye.